Welcome back. So some of the markets are flashing a little bit of green across Asia. The Hong Kong market's actually doing okay. The Australian market's up about 0.25%. The Nikkei that was in the red has now, turned towards the flat line. So that's how it is. Keeping fingers crossed. That's the mood across Asia. Let's get at the implied open up. It was very quiet last week. Checked it. Still the same, just about 4-5 points up. That's how we could actually start up. Okay, let's straight away get to the stock list of the morning. Plenty of names to watch as always. We have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, some news coming in on Hindalco. What's happening?
Well, that's right. Hindalco, they had their annual meet and they've given the broad takeaways. So just run you through a few of them. They're saying that Novelis in the near term will return to the Q2 FY25 profitability, which means it'll be closer to around $500 per ton. That's good. They're saying the longer term guidance of around $600 per ton, that holds as well. That's positive. They said that before. They're talking about, moving to 75% recycled content from around 63% right now. That's at Novelis. Novelis, the growth capex has been maintained at around $5 billion. No worries on that front. I think the problem will be on the Indian capex, and that could be the lone point that could pressurize the stock. Otherwise, everything else is more or less in line and more or less positive. The Indian capex has increased from around $1 billion that they had outlined earlier to around $5 billion odd. And the capital allocation priority is, they say, that the debt to EBITDA will be maintained at around 2x on a consolidated level. Phillip Capital, they have a buy rating on the stock with a target price of around 760 rupees. However, they are talking about this FY27, capex number, which is expected to peak at around $4 billion, $2 billion for India, $2 billion for Novelis as well. And because of this capital-intensive year, they say there could be a bit of a mismatch on the cash flows, which could be a bit of a risk to the stock in today's trading session. So because the Indian capex has been increased, I expect some kind of pressure on the stock in today's trading session.
Oh, okay. All right, Nigel, thanks very much for that. So keep an eye out on this one on the downside. Auto sales numbers, we've been, of course, telling you what's been coming our way. Sudarshan is here with a summary. So over to you.
Morning, Prashant. So today I have two stocks in focus. First one is Tata Motors. Here I'm going with red despite company reporting sales that were higher than estimates. And the reason of going with red is because it's underperformance against the peers. Talking about the CV segment, it has shown a decline of 3%, while for Ashok Leyland, the growth was at 15%. In the passenger vehicle segment too, it saw a minor increase of 3%, while on the other side, M&M SUV segment saw a growth of more than 23%. Even Maruti has shown a growth of almost 6% for its utility vehicle or say SUV segment. And that is the reason I'm going with red for Tata Motors. Next up is Hyundai Motors. Here, total sales were higher than estimates, and the main contributor remains the SUV segment. Its Creta remains the highest selling SUV in India, and in FY25, SUV's share to total sales for Hyundai remains around 70%. That's the highest that company has reported in the recent times. Also, the total sales were up nearly 3%, with both domestic and exports seeing a healthy increase. And that's the reason I'm going with green for Hyundai India.
Okay, all right. Thanks a lot for that, Sudarshan. Well, I'm looking at two more stocks, NMDC as well as Coal India. Now, we have the operational performance that's coming for NMDC. And it looks actually pretty good because, remember, they had a strike in the past month that would affect the numbers. And even taking that into account, actually, they've given a mid-single-digit growth in the total sales numbers, which is heartening because at Chhattisgarh, those numbers were hurt by the strike that was there. So on expected lines, that's lower. But they seem to have made up most of that at Karnataka. And that's why you're getting a mild growth. Though for the year, it's more or less flattish, expecting a bit of a green tinge on NMDC because of this operational performance. And as Sudarshan said, maybe that higher royalty tax in Karnataka may be pushed back a little bit. So we'll have to see how that pans out. Tinge of green on this one. Coal India, a very, very minor increase is what they've taken of around 10 rupees per ton, both for the coal, for coking coal as well as for non-coking coal. And it's for both the regulated as well as the non-regulated sectors across Coal India. They're saying that the contribution of this will go to a particular corpus, which hasn't been factored in by the state. And it comes into effect from the middle of April. So mild green on the stock is what we're going with, just a 10 rupee increase per ton. But let's hop across to Vamakshi. She's here to tell us about MCX. Vamakshi?
Well, Nigel, good morning. MCX has, will be in focus on the back of a trading activity update going with the red for this counter, and that is because, as per Morgan Stanley, MCX transaction revenue stood at 289 crores in the fourth quarter. This is a downtick of almost 4% as compared to the previous month, and it is also a tad bit lower as compared to Morgan Stanley's own estimate of 293 crores. The average daily transaction revenue stood at 3.9 crores for the fourth quarter. This is slightly below Morgan Stanley's estimates of 3.95 crore. Now keep in mind that Morgan Stanley has an underweight call on this counter, target price of 3,400, which is significantly lower as compared to where the stock is trading today. They're building in 4.02 crores of ADTR in FY26 and 4.19 crore for FY27. UBS also has a note that has come out on MCX. They have a buy call, but they've gone ahead and cut their target price from 7,800 to 7,250 crores. They believe that the volumes this time around indicate a soft quarter, but they're expecting the volumes to improve further on. Overall, they're expecting the quarter 4 revenue to decline by almost 5% sequentially. So therefore, going with the red for MCX.
Okay, that's a classic tug of war, bull versus bear, between the views coming in, UBS on the bullish side and Morgan on the bearish side on MCX. Got it, Pamakshi. Thank you very much. Over to Abhishek then. Some of the quarterly updates have been coming in for CSB Bank, I think, and SBI Card. Abhishek?
Well, to begin with CSB Bank, it's been an outstanding quarter for them on a sequential basis with respect to the business momentum. Take a look at deposits. That's grown by 24% YOY and more than 10% on a sequential basis. Calculation shows that the CASA ratio might have improved quarter-on-quarter by about 10 basis points, which is heartening to see. Gross advances are up nearly 30% YOY and about 10.1% quarter-on-quarter. In this, the gold loans have grown at 42.5% YOY and about 4.5 to 8% on a sequential basis. The gold loan share has increased to, has declined on a sequential basis, but it's improved on a YOY basis. X of gold loans, the total loan growth is at 25.3% YOY and about 11.65% on a sequential basis. Now, RBI has given out, credit card data for the industry. So, for the industry, the total card issuances have grown by 8.7% YOY and about 0.4% sequentially, but the spends have declined massively on a month-on-month basis. So overall, the spends have declined by 9.2% month-on-month, and average spends hence have declined by 9.5% on a month-on-month basis. For SBI Card, the total card issuances have grown by 10.2% YOY and about 0.9% on a month-on-month basis. The spends have increased by 12.5% YOY and declined by 9.7% on a month-on-month basis. So average spends over there have declined more than 10.5% on a month-on-month basis. So take a look at the market share. The credit cards, overall the total number of cards, that market share has improved both YOY and month-on-month. However, the spends market share has declined on a month-on-month basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's wind this down with Vinny, who's here to tell us about V-Mart Retail and rides. Morning, Vinny.
Good morning, Nigel. So starting with V-Mart Retail, Q4 update that has come, and a good update is what we could call it, because revenue seen a growth of around 17%. This is for Q4 itself. Overall, V-Mart Retail's revenue, that's seen an improvement of 18%, and LimeRoad continues to be a bit under pressure. That's seen a decline in terms of revenue of 47% on a year-on-year basis. Now, same-store sales growth, that's an important one for the retail company. Q4 same-store sales growth has come in at 8%, while for the full year, they've seen a growth of around 11%, and V-Mart itself has seen a 7% improvement in terms of same-store sales growth. Overall, when you're looking at it in terms of commentary compared to Q3 also, they have done well and in line with what the company had highlighted. They said that the revenues would be in that mid to high single-digit revenue growth, and that is what they've achieved in terms of for FY25. So we're expecting green coming in on the screen for V-Mart Retail. Other than that, rides, a bit of an issue coming in on this front, because rides and the UP State Bridge Corporation, they have actually terminated one of their agreements. Now, rights is saying that this was mainly due to some interpretation issues that they had in terms of the agreement. No work had started still for the company, but and they're not going to see any financial impact, but still this is a big contract that is for the company which they have lost. So that is why we could see some bit of a red coming in on the screen for rights.
Okay, all right. Got it, Vinny. Thanks very much. By the way, on V-Mart Retail, we'll be touching base with the management. They will be joining in at around 9:50 this morning to talk about demand trends and, of course, the outlook for FY26. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are Hyundai Motors, NMDC, Coal India, CSB Bank, and V-Mart Retail. The ones that have negative news flow around them, SBI Card, Hindalco, Tata Motors, MCX, and RITES. Okay, we'll take a quick break. Come up on the other side, and we'll talk commodities. What do these tariffs mean for the commodity universe? The huge rise in gold. Peter Maguire of Trading.com will join in.
Welcome back to Bazaar Morning Call. Well, we've told you about the equity markets, but the commodity space is buzzing around. Manisha Gupta joins us to help us out with a complete wrap of what's going on overnight. Morning, Manisha.
Morning, Nigel, and thank you for that. Well, I'll start with the gold prices because we finally seem to be taking a bit of a breather after a string of record highs. Well, let me tell you that in this year, we've seen 20 days of all-time highs already, and we are up by nearly 19% for the gold prices in this year. A lot of safe haven money, new money, and a lot of alternate money really seems to be flowing into gold right now. We've seen 10% of gains in the previous month itself. Well, ahead of tariffs, the volumes in the Asian markets are slightly on the lower side, but we still are holding about 3,100 and not too far away from that all-time high. What has seen profit taking, though, has been metals as a sector. Silver fell 1.5% overnight. Copper was down 0.5% as well. But because the dollar index also is declining, there is some support we've seen coming because of that. And finally, about the crude oil prices, we did see 5-week highs yesterday, but that has come off a bit ahead of the reciprocal tariff announcement today in the evening. The U.S. crude inventories also surged by 6 million barrels. And for crude, more importantly, it is going to be about the OPEC and allies meeting. Earlier, it was scheduled for 5th of April. Now it is rescheduled for 3rd of April. And there is an expectation that you could be looking at an approval of a hike of 135,000 barrels per day from the month of May. So plenty happening. And in addition of that, you also have the U.S. non-farm payroll data that comes in on Friday. So the rest of the week, clearly very, very volatile.
Oh, absolutely. It's almost dizzying, Manisha. So many cues, right? And on oil, like you said, the U.S. inventories are higher. Then there's this OPEC meeting. And then there is Trump saying that he's very, quote-unquote, pissed off with Putin. So, yeah, there's a lot going on. Thank you very much for wrapping it all up for us. Let's